In a world increasingly shaped by economic shifts, a new challenger is emerging on the global financial stage, the BRICS currency. This isn't just about a new coin. It's about a potential paradigm shift that could redefine international trade and power dynamics. BRICS, an acronym for Brazil, Russia, India, China, and South Africa, represents a formidable alliance of developing economies. Together, these nations account for a significant portion of the world's population and economic output. For decades, the US dollar has reigned supreme as the world's primary reserve currency. Its dominance has underpinned global trade, commodity pricing, and international finance. However, the dollar's hegemony is not without its critics. Many nations, particularly those outside the Western Bloc, have expressed concerns about its influence and the geopolitical leverage it affords the United States. The idea of a BRICS currency isn't entirely new, but it has gained significant momentum in recent years, particularly in response to geopolitical events and a growing desire for financial independence among member states. One of the primary drivers behind this initiative is the ambition to reduce reliance on the US dollar for international trade settlements. This could help insulate BRICS nations from external economic pressures. Imagine a scenario where a Brazilian company can trade with an Indian company directly in a BRICS currency, bypassing the need to convert to US dollars, thereby saving on transaction costs and exchange rate risks. The proposed BRICS currency aims to facilitate smoother and more efficient trade among member countries, potentially boosting intra-BRICS commerce and strengthening their collective economic power. Beyond trade, a BRICS currency could also serve as an alternative reserve asset, offering central banks a diversified portfolio beyond traditional currencies like the dollar, euro, or yen. This diversification could enhance financial stability for member states, allowing them to hedge against fluctuations in major global currencies and reduce exposure to external financial shocks. The architecture of a BRICS currency is still under discussion, but several models have been proposed, ranging from a basket of BRICS national currencies to a new, entirely independent digital currency. One popular idea involves creating a composite currency, similar to the IMF's special drawing rights, SDRs, where the value is derived from a weighted average of the member states' currencies. Another fascinating possibility is a digital BRICS currency, leveraging blockchain technology for secure and transparent transactions. This could streamline cross-border payments significantly. The transition to a new international currency is, understandably, a monumental undertaking. It faces numerous challenges, both technical and political. Building trust and widespread acceptance for a new currency will be crucial. This requires a robust legal framework, transparent governance, and strong economic fundamentals among member states. The sheer scale of coordinating monetary policies and economic interests among 5 diverse nations, each with its own priorities, presents a significant hurdle. The current global financial infrastructure is deeply intertwined with the US dollar. Detaching from this system will require substantial investment in new payment systems and technologies. Beyond BRICS members, gaining the endorsement of other developing nations will be vital for the currency's success. This involves demonstrating its stability, efficiency, and fairness. The geopolitical implications are vast. A successful BRICS currency could signify a shift towards a more multipolar world order, where economic power is distributed more broadly. It could challenge the existing international financial architecture, which has largely been shaped by Western institutions and their underlying economic philosophies. However, the transition is unlikely to be swift or without resistance. Established powers with vested interests in the current system will undoubtedly react to this emerging challenge. The success of the BRICS currency will largely depend on the sustained political will and economic cooperation among its member states. Any internal disagreements could derail the initiative. Brazil, with its vast natural resources and agricultural prowess, plays a crucial role in providing commodities that could be traded in a BRICS currency. Russia's position as a major energy producer could see its oil and gas exports increasingly denominated in the new currency, further boosting its adoption. India, with its rapidly growing economy and large consumer market, offers significant potential for trade and investment within the BRICS framework. China, being the world's second-largest economy and a manufacturing powerhouse, is arguably the biggest driver behind the BRICS currency initiative, seeking to internationalize its own financial influence. South Africa, as the gateway to the African continent, brings a unique perspective and potential for extending the BRICS currency's reach into emerging African markets. Beyond the founding 5, many other nations have expressed interest in joining the BRICS bloc, a phenomenon known as BRICS Plus. This expansion could further solidify the currency's global standing. Saudi Arabia, with its vast oil wealth, joining BRICS could significantly impact the petrodollar system, as oil sales might increasingly be settled in the new currency. Argentina's inclusion would bring another major Latin American economy into the fold, strengthening the bloc's presence in the Western Hemisphere. The United Arab Emirates and other Gulf states could further bolster the BRICS currency's viability by integrating their substantial financial resources and trade networks. The BRICS Plus expansion indicates a growing global desire among developing nations to forge alternative economic pathways, independent of traditional Western-dominated systems. The introduction of a BRICS currency could lead to a re-evaluation of the role of other major currencies, potentially reducing their global dominance over time. This doesn't necessarily mean the end of the US dollar's importance, but rather a move towards a more diversified and multipolar currency landscape. For consumers, a BRICS currency could eventually translate to lower transaction costs for international purchases, particularly for goods sourced from BRICS countries. Businesses engaged in trade with BRICS nations might benefit from reduced exchange rate volatility and simpler financial dealings, fostering greater economic integration. Investors could see new opportunities in financial instruments denominated in the BRICS currency, offering diversified investment options and potentially different risk profiles. However, volatility during the initial phases of adoption is a distinct possibility. Investors and traders would need to closely monitor its performance and stability. The speed of adoption will depend on many factors, including global economic stability, the attractiveness of the currency's design, and the political resolve of member states. Education and public awareness campaigns will be crucial to inform businesses and individuals about the new currency's benefits and how to use it effectively. The geopolitical implications extend to international institutions like the IMF and World Bank. A successful BRICS currency could prompt reforms in these long-standing organizations. Some analysts predict a gradual, rather than sudden, shift in currency dominance, with the BRICS currency slowly gaining traction over several decades. Others foresee a more rapid acceleration, especially if supported by widespread adoption from other developing nations seeking alternatives to the existing financial order. Regardless of the pace, the emergence of a BRICS currency signifies a pivotal moment in global economic history, reflecting deeper shifts in power and influence. It underscores the growing economic might of the Global South and its collective ambition to shape a more equitable and multipolar world. The initiative could also spur other regional blocs to consider their own independent currencies, further decentralizing global finance. The dialogue around a BRICS currency has already sparked important conversations about financial sovereignty, economic fairness, and the future of international trade. While challenges are significant, the potential rewards, increased stability, reduced dependency, and enhanced economic autonomy, are powerful motivators for BRICS nations. The journey towards a fully established BRICS currency will be a long one, marked by continuous negotiation, innovation, and adaptation. But make no mistake, the world is watching, as this ambitious endeavor has the potential to fundamentally reshape the financial landscape for generations to come. So what do you think? Could the BRICS currency truly challenge the dollar's dominance? Or is it an ambitious dream? Let us know your thoughts in the comments below. If you found this video insightful, please give it a thumbs up, share it with your friends, and don't forget to subscribe for more deep dives into global economics.